What's up guys, my name is Blake Moore, welcome to More Finance, and today we're going to be talking about DoorDash taxes and most of all tax deductions and trying to understand the crazy world that is DoorDash taxes. And so before we get started, make sure you guys hit that like button for me and also hit that subscribe button if you enjoy my content, but I wouldn't blame you if you wait till the end of the video to do that, because then you'll actually know if you like the video and you'll know if you enjoyed my content. So just make sure you do it sometime throughout the video. And with that said, let's get into the exciting topic that is tax deductions and DoorDash taxes. Doesn't that just sound like such a fun time? Honestly, like I can't think of anything more that I'd want to talk about. Nope, couldn't think of anything. So before we get started, we need to go over two different categories of income: gross income and net income. What your gross income is how much you make before taxes, and in our case, how much you make before taxes and expenses. Now your net profit is what you make after taxes and what you make after expenses, but your net pay is not what is taxable. So your taxable income is technically your gross pay. And so where tax deductions come in is it kind of bridges that gap so that you don't have to pay taxes on your gross pay and you don't have to pay it on your net pay either. It's somewhere in between all that good stuff. So now that we got that out of the way, let's actually dive into what a tax deduction is. And luckily for you guys, I have my trusty computer right here, which if you go to investopedia.com, it'll give you a pretty good definition. It says a tax deduction is a deduction that lowers a person's or an organization's tax liability by lowering their taxable income. Deductions are typically expenses that the taxpayer incurs during the year that can be applied against or subtracted from their gross income to figure out how much tax is owed. So every person that lives in a different state pays different taxes because there's what's called state taxes and federal taxes. So depending on what state you live in has a different tax bracket for you. Utah's is about 4.9% for the amount of money that I make. If I were to live in like California or something, I'd probably be taxed at about 13%. I'm not entirely sure on that, but I know it's a lot higher than where I'm at right now. And then the federal tax bracket is the same across the country. So you guys can just look up those on Google and figure them out yourself, depending on what state you live in, and you can figure it out that way. So it's just a simple Google search and it'll take you right to it. Now the next question we need to answer is, should you even use tax deductions, and also what tax deductions can you use? So we're going to go over that second question first. What tax deductions can you use? As DoorDash drivers, we get a standard tax deduction of 56 cents per every mile we drive. But you can choose to not use that tax deduction and use what's called an itemized tax deduction, which is where you calculate every single item you use towards your business and you can subtract that from your overall gross income, if that makes sense. Let me give you guys an example. So if I were to just take the standard deduction, I would just track the miles I drive, and then at the end of the year, I would take all those miles, multiply them by 0.56, and that's the amount of money that I would get as a tax deduction. But if I were to use the itemized tax deduction, then I would have to keep track of every single expense that I spent during the entire year towards DoorDash or towards my business or whatever it is that you're doing. So that would look something like gas, your car payment, your phone bill, any accessories you buy for your car to help you out with DoorDash, like a hot bag or a thing to hold your phone on the dashboard, anything like that. When it comes to individual items that you're spending towards your business, you can deduct those. But the only way you can use that tax deduction is if it comes out to be more than the standard deduction. So kind of gets confusing. I like to just do the standard deduction because I feel like it ends up getting me more anyway, and that way I don't have to track every single little thing I do. I just say 56 cents per mile I drive. Easy enough. So now that we know all about that and what we actually can write off, let's go into if you should actually use tax deductions and what they exactly are. Basically what they are is a subtraction of your gross income, and then the total you get after you make that subtraction is the amount of money you have to pay taxes on. So in a lot of my videos, I go over my tax deduction, and then I say because of that tax deduction, the money that we have to pay towards taxes is this amount, and then I take 30% of that total because that's pretty much the tax bracket I fall into. So let me explain what that means exactly. So basically you have your gross income, which let's say is $1,000, okay? And then you figure out that in order to make that $1,000, you had to drive 1,000 miles, which would be pretty bad. But just for the purposes of this video and easy math, that's the number we're going to use. So then you would take that 1,000 miles you drove, multiply it by 0.56, and you would get $560 that you could write off. So that means that your gross income is that $1,000. The total you have to pay taxes on is only $440. So then you would take 30%, or depending on what tax bracket you fall into, you would take that percent of the $440, and that's how much you would owe on your taxes. So that's kind of how tax deductions work. Now, should you use them is a big question. And you might be thinking, Blake, why would you not want to use that? You'd be paying less in taxes. Like, that's a no-brainer. Obviously, I'm going to use every tax deduction I can possibly get. Well, there's kind of a catch, because unfortunately, when you use tax deductions, it shows to the IRS that you're only making the amount of money that you're paying taxes on. So going back to that scenario with the $1,000 gross income. So the IRS is only seeing that you're making $440. They're not seeing that you made that $1,000 because you subtracted the $560 worth of tax deductions. The IRS sees that as money that you didn't make. They just see, oh, he made $440. So when does this come into play? You might be wondering. So this comes into play when you're trying to apply for credit cards, when you're trying to apply for a car loan, a mortgage, all sorts of different things like that. And this can really become a big problem. And I've seen it happen in my own life, honestly, and it's annoying. Because this year, I'm not going to write off any of my taxes. Because I'm trying to buy a house in 2022, I can't write off anything in 2021, or my taxable income is only going to be like $20,000 or $30,000 or something like that. But if I don't write off anything, then the IRS sees it as that I make $80,000 a year, so that I can actually get into a house, if that makes sense. So also, if you're going to try and get a car loan in the upcoming future, or if you're trying to apply for a credit card, this comes into play during those things as well, just like it would work out for the mortgage. The IRS sees that you only make $440. They're like, nope, we're not giving you any loan, because honestly, if you make $20,000, you're not getting any loan, unless it's like a $1,000 loan or something. And you're probably not getting any credit card unless it's like one you could get at Macy's or something like that. Like, it's really hard to get good deals on things. And you might be wondering, like, why does all of this matter, especially when it comes to like credit cards? You might be thinking, well, I'm just not going to get any credit cards. I'm not going to worry about all that. Why would I want to go into debt for those things? Well, in order to get a mortgage or a car loan, you're going to have to build up some form of credit, which is easy to do by getting credit cards. And if you can't get credit cards, you can't build up your credit, which means you're not going to be able to get the car loan or the house you want. And it's just kind of a snowball effect. So I wanted to make this video to help you guys understand what a tax deduction actually is and if you should use them, because this year I am not going to be using them. But in my finance breakdowns, I will still be going over how much I can deduct, because I feel like it helps out new dashers and it helps you guys understand kind of how much money I would be paying towards taxes, so you can use that same model in your own dashing. So anyways, hopefully this video made sense. Hopefully it was easy to understand. Hopefully you guys could comprehend it. And if you still have more questions, feel free to reach out in the comment section, or you can also email me. Email is down in the description. Or if you want one-on-one video chat, me explaining stuff, then you can also subscribe to my Patreon. That's also down in the description if you want to check that out. And so there you guys have it. The fun topic of taxes covered. Let me know what questions you got. Make sure you comment down below. And if any of you guys are more knowledgeable on tax information than I am, because I'm just a 21-year-old kid who does DoorDash and YouTube. Don't take advice from me. This is not financial advice. But if there's financial advisors out there or CPAs out there who are actually watching this video who dash themselves and would like to leave comments, feel free to do that, because any information you guys can give as well will probably help the viewers of this video. So with that said, thank you guys so much for watching this video. Now is the time where you can actually decide whether or not you want to like the video or subscribe. So I'll give you a second to do that right now. And I know you guys made the right decision by hitting that like button and the subscribe button. And as you guys know, you're the best subscribers in the entire world. And I'll see you guys next time.